So we've been tracking gold and we have about 30 hours for the weekly candle to be able to close. So I just want to bring for you a concept of risk management that will actually make you mentally stable, and that is the idiot index. So the idiot index is basically a concept in manufacturing whereby you need to understand the ratio between the cost of a raw material and then the cost of the final product that has been produced from that raw material. And if the ratio of the cost of the raw material to the final product is very high, and then they call it the higher idiot index, and that is not good for the final pricing of the material. And if you bring this concept into trading, you realize that we always, as traders, we tend to have higher idiot index in trading. This is because the cost of trying to flip an account is usually greater or bigger than the actual flip of the account. Let me give you this example. A trader will get out and then try to trade the account diligently with following their trading plans, and then grows the account to a decent amount. And then one moment, the trader says, no, I want to flip this account, make it bigger. And then now, in the end, the trader loses that money. And you may see it like a small incident, like you'll be like, this is just lost, I've lost. No, the ratio of the cost of trying to flip the account, when it has become bigger than the actual flip you've done, that is when actually the idiot index is very high. And the reason for that is your mental health. Because remember, you have been very disciplined and diligent in trying to trade your account. Possibly you're risking 1%, 2%, and you're diligent doing that, and you've grown the account to a certain decent percentage. And now you have lost time and you have lost the money. And it's not just now the money. Eventually, people get depressed and then you're mentally not stable. So you need to understand the idiot index and how you can always make sure that the cost of you trying to flip an account, the cost of you trying to trade is not greater than the profit that you're trying to make. And this is it. The cost will always not be greater if you are managing your positions, you are risking well. So you know what you're risking each time you're entering a trade. And then now you will have a better expectation. So we're tracking gold at all-time highs, and we want to see whether we can risk a decent amount on gold, and we need the confirmation. But it looks like gold is beginning to give us the confirmation. So in the next 30 hours, we could have a trade. That could actually be a good thing. But I just want you to notice this on gold. So this is gold on all-time, on higher, all-time highs. So this is the area we've seen gold to break above. And I'm going to scale down, but I want you to understand this concept really, really, really well, the idiot index. So the idiot index in trading is when the ratio of the cost of trying to flip an account is bigger than the profits of the flip. So poor risk management causes mental issues, and gold is aligning well for sales. We'll be watching out for sales in the next 30 hours. I will just be watching out for sales. And if I get the opportunity, I'll risk 1% on that trade for a reward twice or thrice what I'm risking. So you need to understand this and then begin to apply it in your trading. So let's see gold now. This is an all-time high. Gold has broken above to form a new high. Okay, so I'm going to scale to lower time frame, which is the 4-hourly, to try to break and make us understand this well. So remember, this is the highest gold has ever been, 3,580, around there. So now gold is actually looking good now. Remember, we broke above 3,500 and we formed a new high. Okay, this is the new high that actually I would be looking for trading opportunities when gold pushes here. But now what I want you to observe is this. The reason why this high is very relevant is the fact that from this new high, the market comes all the way and forms a new low. So we have a new low. Why is this a new low? Because it is lower than this. We had this as a low, the market comes, breaks it, and then forms a new low. And then from this new low, you see price actually giving us a difference. Now, the difference between this high and then this new low that has been formed is actually here. Okay. Now this is very important because remember this now becomes this is a higher high, and then this is a higher, this is another high, which is lower than this. Now, and then price creates a difference, breaks below this to form a new low. So that means now we have two areas actually to be looking for trades. And one of the areas is if price pulls back into this, we could actually have that reaction to the downside. Now, this is whereby you would be like, is this the place I'm going to risk 1% or 2% of my trading account for a reward that would actually make price to come to this to form new lows here? Or I will have to wait for price to come up here and then fails to continue up and break back inside with another price difference candle, and then I can take the sell. So these are the two areas here. So definitely gold is looking good for sales now. We just need to see how this price difference can actually hold. And if this price difference hold, this is what will be. This will be like your head, and this will be like your left shoulder, and then this will be like your right shoulder, and that will be your trading opportunity. So let's see how this plays out. But the basic concept I'm trying to show you is here is that market was at an all-time high. Market goes to break this all-time high. Now price is hanging in the middle. It is, just look at it like gravity now. So from here, if market begins to come and breaks this low here to form a lower low, and then where the market actually breaks it from could pull back into this to sell, or sell a little bit before it can actually come back to this to now finally sell to the downside. So these are the two scenarios we have, either to sell here or here. So we just have to be watching gold for the next 24 hours or maybe 30 hours. We just have to watch it, especially during New York and then also Asian tomorrow. So let's see how gold is going to play out, but it's really beginning to look good.